All right, guys. All right, back in the action tonight. It's not Halloween just yet. We got one more day to get ready for here tomorrow. Speaking of tomorrow, it's Thursday evening. It's October the 29th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're tuning in for the first time, it's great to have you with me because my job tonight is to help us find the best trade setups for tomorrow, not just any Friday, end of the week, end of the month. Yeah, Halloween, daylight savings, pre-election. It's going to be a busy Friday morning. I want to make sure you guys are ready for the action tomorrow. Speaking of the action, charts are all prepped up in the background, as you can see. Got the E-minis, got the oil, and we got the gold on our radar for tomorrow. End of the week. End of the month. Boy, it should be a pretty darn good session in the trade room tomorrow morning. Before we jump in and put the plan together for tomorrow, I just want to make sure to remind you guys, if you haven't done so already, make sure you subscribe to this YouTube channel. I post these newsletters every evening, Monday through Thursday. Make sure you subscribe so you never miss a great video we publish on this nightly newsletter. And don't forget, if you have any questions for me, drop those questions in the comment section below. I'll get them answered as soon as possible. And as always, I really appreciate you guys tuning in every evening. If you're like me and you rely on this video to get your mind right and get those charts right for tomorrow, if you enjoy this video as much as I enjoy making it for you guys, I really appreciate you hitting that thumbs up button for me tonight on the YouTube channel. So make sure you subscribe, drop those questions in the comment section below, and thumbs up if you guys enjoyed the video content here tonight on this newsletter. Enough of the introduction. Let's get these charts going. It was a busy day in the markets here today. Let's take a look at what's happening in front of us here. Lots of ranges, as you can see, right? Lots of rectangles on the chart. Gold is a bear market into a trading range. We're looking to sell the pops on gold. Gold's got a pretty good chance to make a run lower here. I got a couple of breakout patterns I'm watching for on the gold tomorrow. Over on the oil, oil could be the most tricky of all the markets, or the trickiest, I guess is the right way to say it, of all the markets for tomorrow. There's a range right there, but there's a couple traps we got to worry about. We get a major support, we get a rising support trend line. I'm looking to sell pops on oil. Nothing's changed on oil, but we got to be careful on the entry. I'm going to talk about specifically where and what setups to look for on the oil. And boy, oh boy, there's a lot of open space below us if oil takes a bath tomorrow. We'll talk about some breakout patterns and some targets for oil short sellers tomorrow. And of course, how about that E-mini? Boy, the E-mini, it feels like we're kind of in free fall right now on the E-mini, aren't we? Look at the range, though. There's a big range on this chart. The range is the same range from last night's newsletter. We get this big triangle, right? This big expanding triangle. We're going to talk about shorting it, buying it. Got a lot of potential setups here on the S&P for tomorrow as we finish up the week and finish up the month of October. Before we jump in, though, and get these charts going here, let's make sure we look at the calendar for tomorrow, because I want to make sure you're ready for tomorrow's schedule. Now, don't forget, end of the week, end of the month, we expect this to be increased volatility, right? Remember, as we get to the end of the week and the end of the month, we expect to see traders taking bigger risks, right? Right about now, end of the week, end of the month, traders are getting desperate if they've dug themselves into a hole, or if you made a bunch of money this week, traders get loose, they get more risk tolerant. So expect more risk taking, expect more volatility, and of course, as we go into the end of the week, right, traders, there becomes a sense of desperation in the market. So we do expect there to be a little bit, again, an uptick of volatility as we go into the rest of this session tomorrow. Speaking of tomorrow too, it's a Friday, so remember, early in, early out on a Friday. You've really got to have a good reason to be trading after 11 o'clock Eastern time on a Friday morning. Now, not to say you can't get into positions early in the morning and hold positions into the close. That is one of my favorite ways to finish up a day, holding a runner into the close on a Friday. But be aware, after 11 o'clock, that kind of scent of desperation, right, comes into the markets, and we oftentimes do see patterns. Good patterns don't perform as well. Good setups don't perform as well as we get into that 11 o'clock, 11:15, 11:30 block. So tomorrow morning, early in, early out. Don't hit that snooze button tomorrow morning. Get there early, get out of there early, make your money, right? Follow your plan, stay disciplined, and don't be gambling in the afternoon, right? Tomorrow afternoon, get that Halloween costume ready, right? Because we had a Halloween, right, on a Saturday this year, right? Hell yeah. Now, speaking of this weekend, Daylight savings time is coming this weekend. Well, daylight savings time comes to an end. So please don't forget, here in the U.S., we're going to fall back 1 hour on Saturday evening. Right? Fall back 1 hour on Saturday evening into Sunday. So we wake up Sunday morning, right? Clocks fall back, right? 1 hour. So technically, we all get 1 extra hour of sleep to recover from our Halloween parties, right? Or whoever we are celebrating, right? The holiday here this week, right? So our clocks will fall back right here this week. And then, of course, don't even get me started on the election next week, right? Election on Tuesday. We'll talk about the plan in Monday night's newsletter, or make sure you're with us on Monday morning in our trade room, and we'll talk about the best plan, right, for the election, right? So no newsletter tomorrow night. We'll come back and do our next video newsletter on Monday evening. So if you want the updates to be right to be real time, make sure you come out and join us right in the trade room on Monday morning. And speaking of the trade room, right, don't forget, we open up every day, Monday through Friday, 8 o'clock Eastern time. Come out and do it with us here. I'll put a membership link for you guys in the description of this YouTube video. I would love to have you there, right there with me. We can trade this stuff together, right, as a new member of our trade room. So grab the link, the description of that YouTube of this YouTube video, or if you're on the blog right now, I'll put a big button for you right below the video here on the trading blog. Now, as far as the news comes tomorrow, we got one news event tomorrow. Right, personal income and outlays. It's not expected to be the biggest news event of the week. The biggest news event of the week was probably that blowout 33% GDP report that we saw this morning. So we do have the personal income number at 8:30 tomorrow, but again, I don't expect that to be a blowout number. I will definitely be watching it closely. We'll certainly be looking forward to trading the response to that number tomorrow, but I wouldn't expect it to have as big of an impact as news we've seen earlier on in the week. So early in, early out, we got news at 8:30. Again, every morning, come out and join us in the trade room. The link is in the description of the YouTube video. Let's get this party going back to the charts now. We know the plan. Again, make sure you check your clocks, right? Especially if you're outside the U.S., right? If you're in the United States, right? Most of us are on the same page on that. But if you're outside the U.S., though, make sure you double check times for next week's trading session. Charts are all ready. Got the S&P, got the oil, and we got the gold here. Let's jump in first to the S&P 500. Looking at the E-mini here, coming out of yesterday's trading session. What's the most important factor right now on this E-mini? We're basically bearish. And we're kind of in this trading range, right? This expanding triangle. And the market is ultimately rotating back and forth, and we're kind of in free fall right now. You know, it kind of feels like that, doesn't it? Now, most of this is probably in the back of some really disappointing earnings reports out of the FANG stocks. We talked about that in last night's newsletter, right? A lot of the tech companies are getting hammered here this afternoon. That's probably not hurting, right, this drop down. But, in last night's newsletter, we talked about the fact that we had that spike in channel, right? And the goal was to short the pops, right? That was pretty much what the plan was yesterday. A gorgeous example of a nested failure, right? I mean, it's just classic nested failure pattern. If you watched last night's newsletter, right, you were definitely ready to short these pops here today. Now, again, most important information right now on this chart right now, we're in kind of free fall, right? But we are ultimately rotating, right, from one side of the range to the next side of the range, right? That's pretty much what's going on right now. We're trying to rotate back down to the other side of that trading range. Well, my job is right now is I want to look for a chance here to get short, right, up around levels of resistance. We're bearish right now, so I'd like to be a seller up at levels of resistance. I also wouldn't mind, as the market goes lower, right, to find some shots to go lower here. So really two key setups I'm watching for right now. What I would really like to get is I'd like to get this thing to pull back off of this low, get up above this moving average, ideally get into some of this resistance up here, and see if I can get some buyers to get caught on the wrong side so I can sell into those stop losses and take this market lower. You know, again, I don't want to sell inside the range here, right? This kind of range in here is the no trade zone. Strong move down though, I would love to see us get above the moving average, get up and into some of these resistance areas, see buyers try to hold, right, and look to sell into those stop losses for another leg lower. We have that strong move down and continue, right, that move lower. So think about a buyer failure pattern off the high of or above the trading range. Ideally, I'd like to get it up around that resistance trend line up overhead. That would be ideal as long as I'm not selling inside that trading range. Buyer failures above the high of that trading range. Now, if the market goes lower, you can see we're opening up here in Asia right now. I'm a few minutes late here to the video tonight. If the market runs lower here for us, there's a couple different patterns I'm watching. One of them would be if we pull back, hold, right? If we pull back, hold the pullback off the moving average and roll over here, I'd like to go grab a channel off that low, channel off that high, right? And short, if I can get this mouse to work, right? Short off the high of that channel to complete this pendulum swing. Right? The amount of the move above the range is the amount of the move below the range, right? The range from last night's newsletter acts as a magnet. So again, if the market does want to keep going lower here, if it pulls back and accelerates off the moving average, now I'm going to grab that low, find that high, look for that short off the high of that channel. Ideally, I'd like to get that before we end up getting down to the low of this triangle and down to that pendulum swing. Another pattern I'm watching for as the market rolls lower is we call a two-try trap, a shallow pullback, a lower low, and a trap high. It's another one of my favorite kind of breakdown patterns here as we roll back down to the other side of that trading range. So there's about three pretty simple setups I'm watching for. Again, one would be a buyer failure. Now, one of the things I want you guys to keep in mind too is this trading range. Let's say, for example, the market runs sideways inside that range here. If we run sideways inside that trading range, just remember the goal from last night hasn't changed. If we end up going sideways here, this creates a trading range again, right? We're going to be looking to short the pops, right? Sell above the high of that trading range. I want to see us go up. I want to see buyers come in, try to buy the pullback, right? And we can short into those stop losses. Now, like we saw in that big move higher, if it really takes off, then use the nested failure pattern, right? The one try, the two try, and short from there. We talked about that nested failure in pretty good detail in last night's newsletter, didn't we? Right? So keep an eye if the market goes sideways. So, very, very simply put, I'm looking to short as we go higher, right? But I'm going to wait here for buyers to get caught. Let them try to buy the pullback. I'm not trying to pick a top. I'm trying to wait for those buyers to buy the pullback so I can sell into those stop losses. If the market rolls lower, again, either with a 1, 2, 3 move off the moving average, draw that channel, find that channel, get short off the high of that channel, or if it just kind of keeps on bleeding lower here, right? If it kind of keeps bleeding lower, I'll look for that shallow pullback, that lower low, that trap high, right, and short from there. The goal of this is to either sell above the range or as the market rolls lower, get in before we get down, right, to retest that low here. And if we sit inside the range right now, we sit on hands, wait for the pops, short into those buyer failure patterns. So it's a range. I'm talking failure patterns and breakout patterns, nested failures, buyer failures, 1, 2, 3 breakouts, and 2 try breakouts. Guys, I cover all of those patterns in my free trading classes, right? I put a link up here in the upper right-hand corner. Now, obviously, we'll trade this stuff together every morning in our trade room, but if you're not with me every morning, grab that link just popped up there in the upper right-hand corner. You got to grab the free trading course. That way, next week, when we come back, right, in the month of November, you'll have the experience you need. So when I say 2 try breakout or 1, 2, 3 breakout or nested failure or 2 try trap, you'll know the terminology, you'll know the patterns that I'm talking about. So pause the video, grab that link in the upper right hand corner, get your hands on that free trading class. You'll love the free course. Everybody loves the free course. It'll teach you all about my favorite setups. Last but not least here on the S&P, how do we turn bullish right now? We got to get some momentum going, right? We're so bearish right now. How do we turn bullish? Well, first of all, it would help to get a nice pop off these lows. Then the buyers, they're going to hold that pullback and they're going to jump off the moving average. If I can get what I call a 1, 2, 3 reversal, right? Remember, a strong move is not enough, right? Look at the strong move we saw right here. That failed too. So a strong move, they've got to hold that pullback. If they can hold that pullback, now I can mark the high, I can mark the low, right? And I can buy the low of that new channel. This is why I always tell you guys, I don't trust that first breakout pullback, right? I don't trust the breakout pullback. Breakout pullback fails. Breakout pullback fails. I don't care how strong the breakout is. If they can't hold the pullback, we're looking to short back into that range. But if they can go up, strong move up, pull back to the moving average, and jump off the EMA, by all means, absolutely. Mark the high, mark the low, right? Looking for that buy off of that low. Where would these buyers be trying to go, by the way? They'll be trying to get to that 33.56, right? That prior all-time high up there is a pretty tasty area if the buyers can turn this thing around. If the bears continue this party going down, right, we expect to see the pendulum swing at 31 and then 31.98. We talked about that in last night's newsletter. Call it 3,200, right, to make it even at those lows. So selling above the high of the trading range with buyer failure patterns, right, and of course, if we roll over, looking for those two breakout patterns I mentioned earlier. Again, grab that free trading course. Everything's talked about, right, in that free course in a lot more detail. All right, S&P is looking good. How about some oil? Now, like I mentioned earlier, oil is probably the most difficult out of all of these markets. What's the key takeaway on the oil right now? The key takeaway is we're bearish. We're kind of finishing up in a range right now, but we closed just above a major support level at 35.68. You can see they came back, kind of kissed it there, right, and then bounced back above it. We talked about this level, I believe, right, in last night's newsletter. This is a big, big support level. So it looks to me like they kind of overdid it, right, and then came back and said, okay, this is likely where, right, we found balance here for tomorrow. So it's basically a trading range. It's obviously a bear bias. Very difficult to be bullish on crude oil right now. On top of that, we have a very strong move down, right? Very strong move down. Anytime we see this much strength in one direction, there is a big bullseye right on that low. Right? The big mission is to get right back to that 34.92. That's the big bullseye. And I'll tell you, if they can keep it going through that low tomorrow, look out below. There ain't nothing down here until 32, right? 32 is the next big milestone. So there is a lot of wide open space, right? A lot of leg room down there for these bears to stretch out if they can push this thing lower here. The biggest problem we have is that I got to be really careful about getting short into that support level. So what happens in these situations is when you have you get a very strong bear move down, right? The odds are very high we get back to retest the low. But the way they finished it above that 35.68, it basically tells you that if I want to be a seller, I have to free up some space, right? I can't take a straight, because you can see, it's a great looking buyer failure right there, right? This is a great looking pattern just above the high of that range, but there's no meat on the bone. You know, there's very little profit potential before you run into that level of support. A lot of professionals are not going to try to sell into that. Right? They're not going to try that. They're going to wait for the market to either break down so they can short it on the way through it, or they'll wait for, which is what I think the best setup will be, wait for a pop higher and short it up around these highs. You know, free up some space, as we say in our trade room. So we're bearish. I want to be a seller. I'm concerned right now about this 35.68. Right? That's my biggest concern right now, is that major low. The range is the magnet. Again, I'll use the size of that range to find my sell zones, the size of that range to find the buy zones. It's a very strong bear move down. So I'm going to stay focused on the sell side here. There really are two basic ideas you kind of want to think about here. One of them would be, well, I guess three. One of them would be if we pop higher. Now, if we pop higher, this would be the ideal. But as you can see, if we pop higher, though, that trend line is going to be that's not going to be our friend. Well, it could be our friend as long as we can get 1, 2, and underneath and use it. right? So think of this almost like a nested failure pattern. If you've been following along with me this week on this newsletter, right? We have to assume if the market pops higher, it's going to feel very bullish. Okay, I wouldn't go betting the farm though on the bull side of this market though, because again, chances are it's going to be sold pretty aggressively by long-term sellers who just simply don't want to short into that 35.68. So what I'm going to try to do is, I obviously, as a short-term day trader, I'm not going to use a 200 tick stop, right? Like a lot of longer-term traders would do. You'll see scalers in, right? You'll see sellers start to sell into this as it goes higher. I would rather be more precise on the entry. What I'll do is I'm going to use that trend line to my advantage, hopefully, right? And let those buyers try once, let them try twice. Strong move up, like we talked about on the S&P, right? Go back to the S&P real quickly here. Remember how the S&P made that big run up? It came back, tried once, came back, tried twice, right? That's the stuff you want to look for on these, right? On these big pops. Now imagine a trend line coming up, right? And imagine using that trend line as that level of resistance. That's the idea of what you're looking for here tomorrow, right? Now we might not even need it if this thing keeps going lower right now, but if it does, again, assume we pop higher here, a lot of momentum. And what does that mean? That means let the buyers try once, get underneath the trend line, because again, that trend line is not our buddy until we use it on the other side, right? So again, kind of what I would call a nested failure with kind of a little breakout pullback around that trend line. Remember, don't get fooled by that pop. Right? Now, if they hold that pop, right? If they were to hold that pop and go, okay, now you earn my trust. Now I can mark that high, I can mark that low, and I can buy that low. Again, I'm not in the business of buying that first pullback, right? And I'm expecting to see a bigger pop because of the trend line, because of that support level, right? It's psychological at this point with these bears. They're not going to want to sell too low. So I'm going to skip the first one. I will gladly take that second one. And again, what do we call that again? We call it a 1, 2, 3. In this case, reversal, 1, 2, 3 breakout into a hidden channel pullback. All right. So those are some patterns to think about as we go higher. Now, you'll notice the market kind of grinding lower here. They can make our job so much easier if we sit here and go sideways for a while, because now we can actually use that trend line now, and we can incorporate that trend line with a buyer failure pattern. Let's just say, for example, here we go sideways for a while, right? We go sideways here. We get underneath the trend line here, okay, underneath that trend line. So it takes that out of the equation. The only problem now is we're all about risk reward ratio. Okay, so think about it this way. If I see a very shallow pullback, right, very shallow here, a buyer failure, I'm not going to be able to make it worth my while. The risk to reward is not going to be there. You're not going to be able to get a lot of sellers excited about that. But if I can get a nice relatively deep pullback, right, relatively deep pullback here, up into those sell zones overhead, see, now I can grab a buyer failure pattern and it's worth my time. Right? Now I can take a small risk for a much bigger reward on that trade. That's the psychology of a range sitting on a on a major support level. We got to get above the range and above that support level to give us a good risk reward ratio on that trade. Because remember, when it's the best risk reward setups are the most attractive. And the more attractive they are, the more they benefit from the self-fulfilling prophecy, right? We learned about the wisdom of crowds in all the Trading 101 books, right? More people are trading it, the more it'll work. There'll be a lot more people selling it up around these sell zones than there will be selling it just above the high of that trading range. There's two things to keep in mind, right? If we pop now or if we go sideways and pop later. Now, as we go lower, we know where the bears want to get to. We know they want to get back to that 34.92. Okay, what I'm thinking is I'd like to see a nice strong move down. And this is what's the concern down here? The concern is not momentum. The concern is location. We're worried about selling too low. And so if you're worried about selling too low, my favorite pattern is a trap entry. What we'll do is we'll look for a trap entry just above the moving average. Right? Come on, come back to me here. My mouse, for some reason, right when we record, loves to act up on us. Right? Let the buyers try once. Let the buyers try twice. And think about this pattern. Right? What this pattern's doing is it's a strong move down. It's a very shallow pullback. Right? That's the giveaway. It'll look like this. It'll be like that. right? That would have been a great two-try trap or two-try breakout. Strong move down, shallow pullback, lower low, right? Strong move down, shallow pullback, lower low, right? That would be a great spot for a trap. In fact, you can see they came back and tried to hit it again, right? People will be waiting for that spot. Okay, so again, if we make a strong run down here, I've got my moving average, lower low in price, shallow pullback, grab that trap. Now, the caveat to that, right, the condition for this is you got to get that before we get down to that low, right? Got to get there before we get down to that 34.92. All right, so just don't sell into that low here. If we run lower, right, let's say, of course, right, strong move down, pull back to the moving average, and we jump off the moving average, right? We blow right through those lows, right? Bloodbath again. Mark up that low, mark up that high, find that hidden channel, and we're selling right off of that high. Relatively easy plan as we go lower. Again, I'm not going to try to sell a pullback into that low. Right? I understand it's very tempting, right? But you got to be careful when you go into those major lows, right? So get up, get underneath the trend line with a two-try nested failure pattern, or go sideways, right? Get the pop, get those buyers to try and fail, and we'll sell into stops. Or do we roll lower? Right? The one that'll be most difficult will be that thread the needle, right? That two-try trap before we get there, right? Two-try trap above that high, lower low in price, trap high. Or does this thing really take a nosedive, right, and collapse running lower, mark that low, mark that high, right, and selling off the high of that new hidden channel. All right, so a lot of risk-reward plays, right? A lot of mindset plays, right, on this chart here for tomorrow. And then again, we talk about the buy side, right? The buy side here. There's a couple options for being a buyer, right? One would be a 1, 2, 3 breakout. That's my favorite, right? 1, 2, 3 breakout, hidden channel, right? Hidden channel test. 1, 2, 3 breakout. Let's say, for example, we go sideways here for a while. We run down to that low. You could start looking for a crown reversal, right? Crown reversal be 1 try for the bears, higher high, 2 try for the bears, right? Just be careful with these. I would not go full size position on a buy setup until we're bullish right now on the oil, just because of fresh lockdowns in Europe being announced this week. Oil has a big problem on their hands, a lack of demand right now. There's not a lot of demand for oil. The pandemic is not being very friendly to the price of oil right now. So just be careful with these crown reversal patterns. Again, I want to take out those lows, right? Complete the mission at 34.92, and then we can look for 1 try for the bears, 2 try for the bears. I always like to grab a trap low on those, right? Kind of the minimum down here would be the 1, the 2, the trend line off that low. That's a little bit more aggressive of the entry, right? Just be aware of that. And we'll talk more about that tomorrow morning and every morning in our trade room. But that's kind of the general idea here, right, of what my best setup's looking for here tomorrow. Should be interesting to see what happens on this 35.68 here area here on the oil, just because of that major support level. Oil's looking pretty good. Looking for a good day tomorrow on the black gold. Speaking of gold, let's finish up tonight on the gold, right? The yellow metal. What's the most important takeaway tonight on this gold? Key takeaway, we're bearish into a range, right? Bear move down. Anytime we see a strong move in one direction, there's a big bullseye right on that low. If they keep it going through that low, 1851, right, is that next objective. That also sends us into a measured move, almost identical at 1851. So a big bullseye right at the low there, 59, right? Next level down, 1851. The next level there, keep going. Here we go. Come on, it's down there, 1815. That's a big chunk for tomorrow. I doubt that'll be tomorrow, right? Maybe next week. But just to kind of give you guys some perspective, quite a bit open space down there if we can crack and stay below 1851. Again, most important clue though right now, it's a range, right? It's a bear market, which tells me to sell. Sell what? Sell at resistance, right? It's a range market, which tells me what? Sell above the range at resistance, right? Resistance levels above, right? Lots of sell areas up overhead. What else does a range tell us to do? Stay out of the middle, right? The range acts as a magnet. Buy low, sell high. And what are the best patterns when the market's going sideways in a range? Failure patterns, right? Failure patterns. So we go up into resistance, right? Let them take it higher. Let those buyers. Now remember, I'm not trying to pick a top up here, right? Don't be foolish. Don't try to pick those tops. It's very difficult to use a small stop loss, a small risk, when you're stepping in front of those moves like this, right? How do you know how far it'll go? What I do is I don't try to mess around with that. I'll just wait for the buyers to come in, have them try to buy the pullback, and once they do that, and you'll be amazed how many times you'll see these things. They'll buy the pullback, their stops are sitting right below that low, and you can just short right in those stops, right? Wait for the price to pop up, get above the range, buyers come in, right, and short into their stop losses. Now, obviously, I'd rather have it up above these highs than right on top of the range, right? But that's a good example of the pattern we're looking for, up a little bit higher up. Again, up into resistance. So price goes higher, let them try to buy the pullback, right, and short right into those stop losses. Now, what we may see too is, if we zoom out a bit further here, there is potential, if you're looking at this on a bigger time frame, there's potential you could call this like a spike in channel, right? There is potential this could be a spike in channel. Now, what do we know about spike in channels? We know spike in channels. You should know this, right? We talked about this last night on the newsletter. They tell us to expect deep, deep pullbacks. So I wouldn't be surprised, honestly, with yesterday's range up here. I wouldn't be surprised. The reason I mention this is because if the market really, if it really pops higher like this, you got to be careful committing to the buy side here until we get the 1, 2, 3 reversal pattern. If we really see a pop, what's the best entry for short? Best entry is 1 try for the bulls, 2 try for the bulls, draw that trend line overhead, right, and short from there. That's the same pattern we talked about on the S&P, right? Remember the S&P popped this afternoon? Buyers tried once, buyers tried twice, right? Find that trend line as resistance. Buyers pop up, let them try once, let them try twice, trap high, even better, right? Even better. Just remember though, if we really take off to the upside, when does the market turn, when do we turn bullish? We turn bullish once they hold the pullback. Yeah, hold the pullback and jump. If you can hold that pullback, I'm good, right? We're bullish now. I'm going to mark the high. I'm going to mark the low. We'll find our new hidden channel, and then we can buy the pullback off that new hidden channel, right? But as of right now, though, we're too bearish. We got that strong move down. There's a big bullseye right on that 1859. If we get up, we're using buyer failures to short back down. If we really pop, we're using nested buyer failures, again, right? Nested failures. And again, we talk about these patterns nonstop in that free trading course. Make sure you grab that link in the upper right-hand corner or grab any of the links, right, in the description of this YouTube video. Come out and join us, and we'll do it together in the trade room. So we know as it goes higher, we're looking for buyer failures right above the trading range. If we sit inside the range, what do? We do nothing, right? We do nothing. We wait for price to pop up. We wait for those buyers to foolishly get caught buying the pullback, right? And we short into stop losses. Buyer failure, back down into that range. How do we get short going lower? We need to get that 1, 2, 3 breakdown, right? 1, 2, 3 breakdown. Mark that low, mark that high, short off the high, right? 1, 2, 3 breakout. Remember, 1, 2, 3, or what is also likely, if the market really makes a run, shallow pullback, lower low, right, and trap high. What do we call those? We call those 2-try breakouts, right? 2-try breakouts. Again, shallow pullback, right? Strong move down, shallow pullback, lower low in price. The lower low in price is what creates that sense of urgency, right? You could almost call this the FOMO breakout, right? The FOMO pattern, whatever it is, because that's why it works so well. That 2-try trap, right, above the high of that swing. So again, a relatively simple idea here on the gold, right? Get us up. Buyers try, they fail, back down, stay out of the middle, wait for the pops, buyer failures. If we roll lower, 1, 2, 3, break down, right? Strong move through, pull back to the moving average, jump off the moving average, mark the low, mark the high, short off the high there. Or it's that strong move down, that shallow pullback to the moving average, that lower low, right, and that trap of that high. All right, on a day's work for tomorrow, right? Remember, don't sleep in tomorrow morning, right? Make sure you get that alarm early, right? Tomorrow morning, early in, early out. And of course, every morning, Monday through Friday, I hope I'll see you tomorrow morning and every morning in our trade room. Don't forget, I'll put all of the important links you guys need in the description of this YouTube video. Grab that link, get registered for tomorrow's trade room every morning, Monday through Friday. I would love to see you there right there with me. And don't be afraid to call me in the office. If you guys have any questions, right, call that toll-free phone number. I'm always here standing by to answer all your questions. We got live chat on the left, live support on the right. Drop those questions if you got them in the comment section below. And I hope by now I've earned a thumbs up on this video. I hope by now you subscribed, right? That way we come back next week. We do this Monday through Thursday afternoons. We'll see you guys again next week on the next edition of our nightly newsletter. And as always, Monday through Friday in our trade room. Hopefully I'll see you guys there tomorrow. Call the office if you have any questions or drop them in the comment section below. As always, my name is Joseph. Be well out there. Be nice to each other. Have a great weekend. Happy Halloween to everybody. Don't forget the time change. And I'll see you guys next time. Adios, amigos. Bye-bye for now.